from London. Welcome to the RANsquawk European morning briefing for today, Monday the 5th of September. Hope you've had a great weekend. Risk-averse trade has dominated so far in the European session. A couple of things worth of note from over the weekend. S&P's Kramer saying that any rating for Eurobonds will be in line with that of the Eurozone's weakest nation, so they're having a junk rating due to Greece there if they are ever issued. Also, Germany's Merkel's CDU party losing a regional election over the weekend. Some further pressure being put on the German coalition there, as on Wednesday the German Constitutional Court will rule on whether the Greek, Irish and Portuguese bailouts earlier this year were illegal or not, due to having not been debated in the German parliament, the Bundestag. Moving then into where we currently trade across the asset classes, the European equity markets, the three main ones, currently down around 3% on the major European bourses. The FTSE index currently down around 2%. Fixed income getting bid across the board. The Bunds trading up a whole point on the session above the 137 handle. Gilts trading above the 129 level to the upside. In the currency space, we've seen some sell-off in cable following the UK services PMI coming in lower than expected, around 51.1. The European currency currently trading softer across the board, however not down as far as one would expect due to the dollar index trading around flat. So particular focus on the banking sector today, worst performing sector in Europe, weighing those European bourses, particularly as the US Federal Housing Authority has confirmed it is launching a lawsuit against the major global banking entities for around $200 billion. So that has been weighing on the banking shares, and particularly we've seen some weakness in the French sector. There is an interesting article on the FT Alphaville blog site saying that US money market funds have been pulling their capital out of the European financial sector, and this is hitting French banks hardest due to their reliance on short-term funding there. Looking elsewhere in the energy complex, WTI and Brent crude futures have been weighed by the overnight HSB Services PMI coming out of China, which was weaker than the previous, and WTI and Brent crude futures just trading both down $1 there. Also, we have seen spot gold reaching above the $1,900 level, $1,900 an ounce level, following the general risk-averse tone across the European session. In terms of the rest of the calendar, there is no major data out of Europe any further, and it is a US Labour Day holiday today, so we'll be expecting some thinner volumes towards the back end of the European session. But that's enough from me. Have yourselves a great trading day.